Hello, everyone. Welcome to this week's edition of Mortgages and Markets. Sam has gone to, we will call it a tranquil place. I don't know
The
what
sanctuary, the
his
solarium.
sanctuary. I'm pretty sure those walls are rubber and the birds are chirping in the background over there, whereas I'm still in my dodgy basement. So, Sam, welcome. Hope you had a good week, buddy.
Likewise, thank you.
All right, let's get right into it. So I'm going to share my screen. For those of you on YouTube, you'll be able to see this. And if you're not on YouTube, well, you know what? Maybe you should be. All right, so first thing that we had come up this week, CMHC, sky is falling, the sky is falling, and the sky is falling hard. So CMHC warns Canadians support for home ownership cannot be unlimited. So CMHC is concerned about a couple of things. And the first thing is once you put 5% down and then you pay the 4% insurance premium, I might add, that's not in here, but once you pay that premium, if your house price drops by 5%, that could work out to a 300% loss. Now, that's based on them saying a 9 to 18% drop in house prices over the next 12 months. Keeping in mind that is national, and we have some areas of the country dropping 30, 40%, and we have others increasing for that matter, or at least staying the same. Kitchener, Waterloo, Cambridge, like southwestern Ontario, generally staying the same. So I was on a call yesterday, RBC economist.
Economist. There you
Thank
go.
you. I can't even say the word anymore. But he was on and he was saying doubtful we will see 9 to 18% drop in 12 months. And keeping in mind it's a national number and they truly are an insurance company where they have to give worst case scenario. Are you seeing that a lot, Sam, in some of the stuff that you read, like worst case, the sky is falling,
Yeah,
get ready?
yeah. I think there's a lot of I don't want to say fear, but pessimism or caution, perhaps is the right word. That after the mortgage deferral program starts to dry up, and the general deferral programs that currently exist, and the funding and the stimulus and the government money and all that, that potentially we could see something that would play out maybe in the back half of the year. It seems to be a conversation at least.
Yeah. And if we flip down here on that note, and probably where CMHC is getting a little bit scared, 1 in 5 Canadians insured mortgage deferrals are in Ontario. So that I get. This part I get. This is a bit of a scary number. So if you're in Ontario and you have a default insured mortgage right now, 12% of them are in that payment deferral program the banks are offering. And they're projecting it could rise to 20% as of September. Now, that's a projection. We're all getting back to work. Hopefully, it doesn't go up that high, but that is something that they're concerned about. In terms of deferrals, though, Quebec and Alberta lead in volume, which is not a huge surprise because Alberta's in a bit of trouble. Quebec's having some issues. And yeah, 12% in Ontario, but as we can see, it's a little bit worse in the rest of the country. But of course, CMHC is national. So as the West goes, we have to go with them, right? So are you seeing regional differences on stuff like this as well with investments and stuff?
I mean, I would say that people in this area are cautious, but maybe optimistic. They don't feel as though we're going to see the same type of dip,
Mm-hmm.
which I mean, I kind of agree with. The reality is, Canada is a very large country, and I think about a quarter of our population is in the Greater Golden Horseshoe. So, there are certain pockets of perhaps rural Ontario or, you know, northern provinces that are perhaps going to struggle more than others. I would suspect that there would be pockets of over and underperformance. So those numbers that we're getting, and I saw them on the Globe all week. Actually, a couple of friends reached out and said, "Hey, should I be cautious or should I be worried about this because they just bought a couple of houses?" It's again regional, right? I'd be
Yeah.
very cautious in that regard.
Okay. All right, Sam, don't make me talk about it, man. Household debt, biggest vulnerability. Here we go. So if we get one more warning on this, man, I'm taking full credit and I'm getting one of those jobs where I can just talk about stuff like this all day long. So Bank of Canada highlighted how fast household debt grew over the past few years. Shocker. In 2000, household debt was just 58% of GDP, but has jumped to 100% by the end of 2019. This is not the look of shock right here. Okay, so this is an issue, right? We were giving out credit cards and lines of credit like candy, so this is going to become an ongoing issue. And listen, you probably see this as well. And just to digress a little bit, banks and lenders more and more, they're asking that key word: what is your fallback position? What happens if your tenants don't pay their rent? What happens if you can't pay your mortgage? What is your fallback position, right? So some of those clients that maybe you and I have done financial planning for, and we've said have a balanced balance sheet, money here, investments here, investment properties or rentals, whatever, those clients are going to come out on top right now, right? So that's where financial planning comes in.
Yeah, the reality is we seem to get this sense that when things are going well, we all want to ride that wave. And I say almost coming out of 2015 after that oil shock, we really have seen a run up in that. People are, I don't want to say over leveraged, but they are leveraged. They have, maybe more risk than we would tend to suggest. And some of those people may get squeezed in a moment like this where cash is king.
Yep, agreed. Last item, and then we'll keep going. So, National Bank of Canada, real estate prices rise, but could change with a recession. I don't want to get too much into this because honestly, who the heck knows what's going to happen with these house prices? Southwestern Ontario, they haven't moved. We had such a glutton of buyers; they're still out there, right? And the ones that are still employed are buying homes, right? Who knows what's going to happen with house prices? It's going to kind of go up and down. We just don't know yet, right? One crazy tweet from Bucko there south of the border, and who knows what happens, right? So
Yeah, I'm also wondering, when you look at it, there's pockets of price ranges as well, right? If we're talking about the luxury market versus the condo market versus maybe the starter homes, I think some will struggle more than others, But to your point, there's still reasonable demand. I still have a couple friends that have been saying, "Hey, should I be buying right now?" Because they've been waiting to get in. You still need a house,
yeah.
recession or not. So,
Hey, when you talk to those customers, Sam, the answer is yes, eh? Just so you know.
and to get them in front of Stephen Green, of course.
Come on now. Come on. You should know that. All
Yeah,
right,
yeah, yeah.
so let's get into some pictures, and this is where I'm going to start to turn it over to you. Do you want to see this one first or the other one?
Yeah, we can leave it here. I mean,
Okay.
really, it's just we've talked about this probably week in and week out. GDP numbers came out this week for Q1 on the US. They were a little bit higher than expected, around 5%. If you flip to the other page there
So,
on the
well, now
Canadian side,
higher GDP means what?
excuse me, my apologies. I meant to
Okay.
say lower GDP,
Okay.
higher deficit, so bigger gap. The expectation, because analysts come out with their expectation of what they think earnings are going to be, what they think GDP is going to be, what they think unemployment is going to be, et cetera, et cetera.
Yeah.
And the GDP numbers that came out this week, at least on the US side, were worse than expected. Not hugely worse, but they were a little bit. I think originally it was a 4.8% expectation. It came in around 5% for Q1. This is Q1 GDP.
Yep.
So, Q2 is the one we're all really watching. That's the height of it. Everybody was in the pandemic. The economy shut down, etc. The banks actually just had their earnings this week, and you've probably seen it in the news. Loan loss provisions, et cetera, et cetera.
Yeah.
There's been some crunching of profits on the financial side, albeit perhaps not as bad as originally anticipated, because we've seen, at least on the Canadian side, financials have had a pretty good week. They're almost up, I don't know, somewhere between 8 and 12%. I haven't looked this morning,
Yeah.
but they've had a reasonable bounce, which they haven't moved at the same rate as, I guess, the rest of the economy or the rest of the markets for the last few weeks.
Yeah, and we didn't talk about that at all. I mean, the banks, a few banks did release their earnings. I think it's if anyone was sitting there thinking, "Wow, those loan losses are a lot more," honestly, like seriously, that's going to happen, right? People are going to default. It's going to happen. I believe CIBC and TD came out with higher than expected, but it's going to happen, right? Like it's going to happen. I think it's just a degree of how much it's going to happen,
Yes.
right?
And will
So
it plateau? That's the other piece to this, is if it plateaus, that changes things, because if Q2 numbers don't come out to be that bad, and I use the term very relatively, of course,
yeah.
then theoretically, as there's a rebound in unemployment and the general economy, fingers crossed that the worst is behind us.
Yeah, and I think, here CMHC, again, I'm just going back to that last article, they're projecting 20% clients in mortgage deferral by September, right?
Yeah.
So, because September is, I believe, 6 months from when we started offering it, right? So, yeah, who knows? It'll be there's gonna be loan losses, folks. It's gonna happen, right? So, okay, so I wanted to show this chart here to you. So for the people on YouTube or not on YouTube, we're just talking about contributions to Canadian GDP growth. And Sam, go ahead, bud.
Yeah, so kind of the same thing we were just talking about on the US side. The Canadian side numbers were not very attractive. Canadian GDP has contracted more than the US. You know, we're at for Q1, what does it say? Negative 8.2, excuse me, um, instead of 5% on the US. So this is going to be driven heavily, probably by the energy sector. That's going to be an area that's struggled. But just generally speaking, we don't have, the Canadian economy has pockets of strength. And even if you look at the TSX, there's only so many industries and sectors that we really cover. We're not as broad. That's simply what it is. We're just not as diversified. We don't have exposure and companies in the same, breadth and scope as some other countries. So when things don't necessarily go well for us, the same thing we saw in 2015 with oil prices when crude oil crashed, we take a hit because we
Mm.
are heavily based on crude.
And it is that heavy, eh? Like that is how crude goes is how we go.
Yeah,
Would I
the
be right in
Canadian
saying that?
dollar, sort of. I mean, not completely. I mean, there are other pillars. Housing is another big pillar.
Oh yeah,
We have
true.
some manufacturing, especially in the central provinces. And there's other exports. There's lumber. There's other things, but a big portion of it does come from crude. And so when crude moves, we move. Right.
Mm.
When crude goes down, generally speaking, it weakens the Canadian dollar relative to other countries. The reason, part of the reason, at least in 08, 09, that we probably didn't have the same pain is crude prices were on the upswing,
Mm. Got it. Okay.
right? That helps get us through. Alberta was really a strong portion of our economy, a decade ago or however many years, 12 years ago. Um, Lately, a little bit hasn't struggled a little bit more comparatively.
Got it. Okay. Cool. Yeah, it'll be interesting to see how this trend goes. And what worries me, and listen, I'm always trying to be a glass half full kind of guy, but what worries me is there's a lot of unknown. There's stuff we just don't know. It hasn't happened yet, right? Things
Yeah.
have opened up. Is it going to stay that way? Massage therapists are back today. Like there's a whole bunch of physios are back today. So there's industries that are just coming back online completely. And hopefully, just simple things like that, people are back to work, and hopefully those people who have 5% down mortgages, then they'll start paying them again. And why so side note, gas prices, they're almost back to $1. But how's that happen?
That's a really deep question. We probably need a whole call on that. Okay, so remember a couple things about oil prices. They do not move perfectly to what happens with crude, first of all.
Okay.
There's things like refining costs. There's things like transportation costs. The unfortunate reality is even the oil that we extract out of Alberta, which is considered kind of, I don't want to use the term dirty oil, but it's sandy,
Hmm.
means that it has to be transported and it has to be refined. We don't do that refining here. So it has to be moved, then it has to be refined, then it has to be brought back, then it gets taxed. There's a lot of pieces that go into it. And generally speaking, crude prices are, a lot of it has to do with futures and forward price estimates. So, I think we're all hoping that the price will come down, but it just doesn't work in a perfect linear fashion as we see. When it's in the news, we're not going to see it that day at the gas pumps usually.
Got it. All right, cool. All right, Sam, thank you very much. Any other comments from this week?
I'd say the only thing we're really waiting on today is there's in the last 24 hours, we saw Trump talking about the presser around his views on China and how he wants to approach it. I'm sure you've seen it, the news around Hong Kong, some of the diplomatic things they're doing over there. So that trade war didn't go anywhere. We were dealing with it pre-COVID. It should still continue. There was only a phase one deal. So the market's a little spooked based on that information, because if he starts to take a bit of a hawkish approach, well, that's going to probably affect people, whether it's tariffs or whatever you want to call it. So that's something we're looking to see today.
Well, and I think not only that, but did you hear about Trump versus Twitter?
Yes,
Yeah.
that's
So,
an interesting development.
I mean, I don't know. You tell me, what's bigger, China or Twitter?
I don't know.
I don't know. This might be a tough one. They imagine if he goes after Twitter and does whatever. Like, I mean, I'm not sure which one's worse, China or Twitter. We'll see. But
Yeah, yeah.
never a
I don't
dull
know.
moment in the United States of America, baby.
Nope.
All right. Well, listen, Sam, thank you, man. Have an awesome weekend. We'll do this again next week. And folks, until next time, we'll talk to you soon.